Mr. Bradshaw at addsometoyourincome.com here to talk with you about ways to make residual income in real estate. First, I'm going to define residual income and how that's different and similar. What are the similarities and differences of residual income and passive income? I will reveal some ways to invest in real estate through the stock market that a lot of people aren't aware of, addressing and talking about ways to invest in real estate, seeing that as an investment instead of a job. And as a little bonus at the end, I plan on covering and sharing with you personal experience and how I personally have invested in real estate where I can call it residual income and it's not an extra job for me. And I'll kind of share my story of investing in real estate and the way that I like to invest in real estate, which is a little bit different than most people think of when they think of investing in real estate. And it would appear I also need to put some tweaks down on my hair, so let me do that for just a moment. Thanks for letting me be human. Let's get started. On the add some to your income adventure, I am often talking about passive income. I talk about my three types of income. The labor income is work you do today and you get paid right away. Passive income, you work today and you get paid at harvest. Gift income, someone else worked yesterday. What we're talking about now when we say residual income, I clearly see the definition of residual income to be I no longer have to do any further work. It's in the way I define it, and I'm pretty sure you'll agree with me, it's that I put money at something or I've done some work. Royalties come to mind right now. You do all that work, you write those books, and then people buy your books, and you're not doing any further work on that book. Usually, it's done and it's out, and you see residual income. This is the point at which it's actually passive. I say passive income means some people get that confused because you often are still doing work, harvesting when it's harvest time. The residual income in my mind means I did all that work way back when, and now I just get to sit and enjoy it, which is different than the passive income. Passive income to me means you're still writing another book or you're writing for another article. You're still working at it. And a lot of investing in real estate becomes that. It becomes you buy a rental property, you have that rental property, and then you have all the responsibility that comes with it. If they don't pay rent, you have to give them notices. If they still don't pay rent, you have to give them an eviction notice. They still don't repent. Pay rent. They still don't pay rent, and you have to actually go through the process of evicting them. They damage the place. You have to pay for repairs. You have to get it out back onto the market, ready to rent it to someone else. You're just hoping that they'll be kind to your own property. That to me is it totally falls in passive income, and yet you're working at it still. Residual income is where you put money at it and then you see the money coming out, and it's the way you invest. And as I promised, I'm going to start with one that's in the stock market that I don't think most people realize. I was just talking with someone it was just the other day, a couple days ago, and was talking about places to invest and how to invest in real estate. And I mentioned REITs, R-E-I-T, and he had no idea what I was talking about. And I said, well, let me explain. It stands for Real Estate Investment Trust. And these are trusts, and they act kind of like mutual funds in a lot of ways, and yet they don't have the office managers of a mutual fund. They are usually just a trust set up. It's just a group of investors coming together to invest in real estate. That's really what it is. And they've gotten themselves to the point where they are bought and sold on the stock market. What am I saying? So you could invest in real estate investment trusts in the stock market. This, again, is investing. That's how I see this as becoming residual income, because that people who live in the houses owned by that trust are never going to be in contact with you. You're not going to get some weird calls or have to make some certain calls that feel uncomfortable to evict people. You are investing. You are putting your money and you're putting it into a real estate investment trust, REITs. So it's a great place if you're feeling like, I want to have residual income, I have a lot of money, I want to put it into real estate, where can I put it? That's a great place to put it. And then it works. You can use your regular account that you use to buy and sell stocks. I should give you Mark Twain's warning. I love this warning. You should know that October is a particularly dangerous month to invest in stocks. Other dangerous months are July, January, September, April, November, May, March, June, December, August, and February. Love Mark Twain's humor, and it just every time you go to invest, have it with a grain of salt. As I've said before, your investing money is money that it's best for you to realize I may see $0 back, so that you can take that risk to put it where you want to put it, knowing that you can still have food on the table, right? That's how investment money should be viewed, and that's why I always talk about the separate bank accounts. I'm not going to get into that here because we're focusing in on residual income, but that you're pulling it from the bank account that's for investment money. Okay, home equity. So speaking of accounts and wanting to invest, I will talk about this here. I personally have never pulled out a home equity line of credit. All right, so the home equity line of credit is where the value of your home has gone up far past what your mortgage is, and you take out a second mortgage, all right, or another loan against the value of your home. You use it as the collateral, saying, if we defaulted on this loan, then you could claim our house. I have close family members who have done this, and I've talked with them, and they've told of their comfort level with it, and they are comfortable with it. As I said, I haven't done this yet. I know enough about it to say I'm comfortable, and I'm comfortable enough to advise people to do this. You, of course, do your homework. You find out the value of your home. You look at what your interest rate is going to be for that second line of credit. You double check, because this is an investing piece. You double check you're going to be able to handle that payment and know that that's going to work for you, and that you know where that money is going to be going. And then let me list a few areas you might invest money. And again, watching this video probably means you're already ready to put in some money. So let's talk about a few more areas besides the ones I've already talked about. Mobile home park owners are often looking for investors. And this could be any kind of real estate mongrel. I guess it's the first name that comes to mind. Those individuals who are investing in real estate, and they are the owners, and they're going to be dealing with all of the headaches. I understand there's a game out there, mobile home park ownership game. Anyway, and it goes over the headaches of being a mobile home park owner. They're going to deal with all that, and all you got to do is put up the money and then see a monthly payment based on what you do. This often works out for investors. You could do the same thing with rental arrangements, where the people who are owning rentals, they would like more money. They'd like to be able to buy more property, and they often get to the point that they need more cash, and they'll make a deal with you. It could also be office space owners. You could yourself get duplex, quadplex. I just am not sure what to say. I fix 6 in one building, but I do know it's out there. And I'm being a little too funny there, but as you're investing, and you're not going to have your name on the property, and the people there aren't going to be contacting you directly. Okay, sometimes called an angel investor. I want to talk about TLC properties. Okay, I know of a teacher who buys a property, usually in the springtime, that needs fixing up. He doesn't get much work done during spring and school, but he gets the property in about springtime, and it kind of plans out what needs to happen, does some demolition if there's some demolition that needs to go on, and then when summer hits, he can finally really get in and work. And his goal is to turn that property over within the next year. Sometimes he has it until May of the next year, but he works mostly during the summer, fixes it up, and brings that property value way up from what it was, and he rarely rents it. Because again, the renting, that's passive income. But the residual income that can happen from this, he does all that work, gets the property ready, and then he has it to sell, and then he moves on to his next one. He's getting one about every year. As promised, I'm going to talk about what I have personally done with investing in real estate that I have found works well for me to see it as residual income. And that is by purchasing the mobile home, being the financer of the mobile home. I found this little niche market for me where people are looking for money to buy a mobile home, and they either don't have enough money or they don't have enough money. Anyway, they don't have enough money. And I come in, what I do is I take the title to the mobile home. So the way the mobile home market works, they are real estate, but they're on wheels. So they're actually certified. They have a it's like for your car. And in fact, it's from the DMV. It'll come to me. The little thing that says you have ownership, just like you do for your car. Registration. So you have this registration. Why this is comfortable for me in a little area that I have enjoyed investing in is because they can't sell the mobile home again until it comes out of, until my name is off of it as a deed holder. That means that it's their home. They know it's their home. The title is in their name, and the title also has my name. And the title isn't kept at their house. It's kept at this other third-party long-term escrow account. They make payments to that third party. They don't even make payments to me. I have a number of these guys, and they often just contact that third party. They don't even communicate with me. And I see the monthly payment that comes in by having this. I call them notes because what we're doing is we're writing up a note where we write up an agreement. I am financing this, and you will pay me back at the interest rate that we both agree on. I usually take the prime interest rate and add 10%, which gives me a nice solid return, and it fits for the amount of risk we're looking at. They know that there's a third party to keep track of the title and then release it to them once it gets paid. I've had a couple of them sell their mobile homes to someone else and then completely pay off the title. That's a great arrangement. I have my cash back in my hands. The title is, once they pay it off, that title company, that's what they do, is they send the title to them. I've had individuals who have defaulted, and I've had to take action, but really very few, like a very low percentage of it, because it's their home, and they're making that payment, and they care for it. And I don't even drive by, I don't even worry about it. It's not a rental. They just owe me money on the cash that I use to finance the purchase of their home. So that's my little way that I've gotten into real estate and seen residual income with monthly payments coming in and very little headache. It's not a rental, and I can count it as residual income. I sure hope to hear and know of ways that you decide to invest in real estate with your money that you have to invest and what residual income comes to you. I also look forward to seeing you on the other side.